Hello, everyone. This is Joshua Hayes at BigWaveTrading.com coming to you with February 9th stock market wrap up. And to be honest with you, today had to easily be one of the most, as you can see here on a Zoom 9, how tight today's session was, and going back out to Zoom 3, one of the most boring intraday sessions overall since the end of December during the holiday period. And I want to show you how still from October to now, from October 24th to February 9th, you can clearly see the S&P 500 is still going nowhere. Overall down a negative 0.78%. Just shows you that we're just in a flat market overall for the past 1, 2, 3.5 months. And then even recently, if we just randomly pick about 2 weeks ago, right around here, we have a slight 4% change. But then if we go back to the 16th, it's only a 2.3%. Go back to the 13th, it's only a negative 0.22%. So it's lateral. Even though the past 2 days, Thursday and Friday, was up, overall using the past week as short term, the short term trend is up. Still, overall, the market really is going nowhere. And that's been the case since October. It's just going nowhere. And actually, since the big down day in October, let's see how far the market's gone. So since October 9th, which was a huge down day for the S&P 500, down 7.62%, the market has moved down negative 4.40 in 1, 2, 3, 4 months. So in 4 months, loses a percent each month. Pretty dull market overall. Let's see if the rest are like that. We know that NYSE is because it's a mirror of the S&P 500. Well, is the small cap S&P 600 the same way? Let's see, its big down day, it was down 8.26% on the 9th, exactly 4 months ago. Since 4 months ago, it's still down almost 10%. So it's been in a downtrend, losing about 3% each month, 2.5% each month. So it's been pretty much the same. And if you just go just a little bit more sideways, you'll see here that since the 24th, it's only gone negative 2.27%. Since the 27th, only 2.18%. So pretty flat market. And then if we just pick this random date right here, you can see from the 12th, it's only down 1%. And then just from this random date on the 28th, down 1.77%. If you could use just the last 5 days, it is in an uptrend short term. So short term pretty much up to lateral, intermediate, sub-intermediate, lateral, and then intermediate term from June, you can see from like the June highs, for instance, still down 38%. And we know the big long-term trend from 2008 still down because 50 is below the 200 weekly moving average. The last one let's look at, just for comparison, just to know what we're looking at, is the NASDAQ. Like I said, if you look at the last 5 days and you have a market up 6%. However, if you just go back 2 weeks, it's only up 2%. And if you go back a little bit further, about 4 weeks, you can see it's only up, excuse me, 3 weeks. You can see it's only up 2.92% during that time, so pretty flat. From the November bottoms, it's up 20%, so that's good. However, intermediate term, we've got to use like around the 27th, up 5% since then. The 24th, only up 2.55%. And look at it from the 23rd of October to right now on the 9th, in about 1, 2, 3.5 months, negative 0.77% move. And let's go to the end of that October move. Whenever it moved down, 5.47% that day. Since then, the market is down 3% on it. So overall, not much doing. That's why it's hard to say that, oh, it's definitely going to go up. Oh, it's definitely going to go down. Because right now, with the way the volume looks short term on the NASDAQ, it could go higher. But before that week, it looked like, oh, it's going to go down because, look, after all the lower volume rally, where 1, 2 in a row lower, 1, 2, not in a row, 2 or 3 lower, but even the third one where got a little bit of support was lower. And you got 3 distribution weeks, then you had a week up week, and then you have this week here, where it's on decent volume. So now you got the heavy volume here. NYSE short term volume, the weekly bar shows that weekly volume is bigger the next day. But overall, still, the big tall red bars from 2008, they trump. And even in 2009, they trump. And in the NASDAQ, you can see the big tall red bars once again. They dominate, and the Dow Jones Industrial Average same way, big tall red bars. So it's hard to be anything but bearish long term, and that just has me think if we rally here, awesome for our long short term. But since we have nothing hot, golden, crispy, beautiful, sexy, whatever you want to call it, I just don't think it's going to work, man. We can get back to the 200-day moving average, and then unless the prices break out above the 200-day moving average on strong volume, which is then immediately followed by the 50-day crossing above the 200-day moving average, I just don't see how these indexes can work out long term. Too many stocks are rallying on low volume right to resistance. One is, let's look at one of the better ones that I'm short. I went short Research in Motion, and at the low, I ended up having a 64% gain. Now, I have, of course, taken profits there, but now I still have a 43% gain. So going long on lower volume rally, look at this. Look at the bars in December, and then look at the second big bar. It's lower than the first, just by a little bit. And then look at January. As it goes along, volume drops, and look at what else goes away from going green to yellow bob. So I got to stay short stocks like this, and that's why I think that they might fail. Now, let's go and just wrap this up by looking at some commodities. Oil, stuck in between the 35-50 range, and I believe it'll be stuck in for God knows how long. Platinum, it had a bullish day yesterday while the rest of the metals didn't, so that was its all right. Today, it held in there, had an inside day, and that's fine because it has an inside day where it has a very bullish intraday close from where it ended up hitting in its lows, so I'm very happy with Platinum. Silver had a bullish day. Very bullish day yesterday, up 1.71%, which something is, there we go. Okay, cool. So silver had a very bullish day yesterday, up 1.7%. Today, it was down 2%. Still, I want you to notice that something happened. I know you can't really see it here, but whenever I go out, I can't believe you still can't see it. 7, 6, whatever. Let's go back over here. Remember I said silver hasn't closed at its low of the day? It looks like it did there, right? 1281 close. Sorry, low of day was 1279. So once again, silver, even after having a pretty bearish day, BOP is still positive, and there is not a low of day close. So platinum had, of course, the best session, only down 1%. Silver was down 2%. So how did gold do? Gold did better than silver, but still not that great. As you can see, gold had a down day, but what do you see once again in gold? A little tail. And that means that it didn't close its low a day. 896 close, 891 low a day. And during the Obama speech, I saw gold go up at least 9 points. So that means that it got 9 back from here, which then puts it at 905. So it's getting back to the old highs of it had intraday of 913 and, of course, 930. So back to 915. Hopefully, you can get to 930 by the end of the day tomorrow. Who knows? Last thing I want to show you is the United States dollar. How's the dollar looking? Bullish still. Bullish tail again today, showing intraday support off the lows whenever the index, hits the lows. The currency is immediately supported, the dollar index, whenever it gets those lows of the days. So for everyone saying that you should be short, had you gone long in July and then loaded up about a week later, you're up 15% from your first buy, and then from the large long, you're up 13%. So congratulations. Continue to stay long. However, my favorite overall play for metals currency is still gold. Let's go longer term on that to show you what it's looked like on a weekly. Looks good. Silver doesn't look nearly as hot, and platinum. But gold is definitely my preferred one that I would say long term. I think everybody should have an IRA. Pull back in gold to me is a chance to buy some. But we're going to go and wrap it up there. There will be a part 2 going over our long and short scans. Since we do not have any new longs, new shorts, no full sells, or no full covers, it will be very short. So you're going to have an easy night tonight. I doubt I'm going to do commentary because it's an inside day, so the free guys are just going to get this video. So pay attention to the video and just know where you're at. Long term, downtrend. Intermediate term, downtrend. Sub-intermediate term, lateral basically. Short term, lateral to slightly up. Hot charts don't exist. Can slim charts are starting to show up. Still don't look like they're in nice patterns. So overall, that's why I have 37 shorts and 11 longs. The 11 longs can work now, but I assume the 37 shorts will work a lot better a little later. Aloha, everyone. Have a wonderful Monday and Tuesday. I'll see you the next time I do one of these videos.